kicked off the year announcing price cuts, um, launching this price war. There have been a series of price cuts, both from Tesla and others. And despite new federal tax credits on EVs, despite these price cuts, the EV market has shown increasing signs of oversaturation. So if you look at dealer inventories of EVs, they're about double what they are for all new vehicles, and so you're seeing some very dramatic price cuts, and companies like Lucid and Rivian, that just haven't achieved scale yet in terms of their production ramp up. They're really struggling in terms of cash burn and still nowhere near profitability.
Tesla had record-breaking first and second quarters this year, and we, like many Tesla investors out there, are hoping for an even better Q3. No doubt Tesla is known for setting ambitious goals, which at first may seem impossible, but with time, there's usually a way to bring these projects to life. EV demand is growing at a fast rate, but one company stands to benefit more from this growing demand, and that company is Tesla. Despite the market challenges, Tesla is still making waves in the industry, unlike most of its competition, who are struggling to keep their heads up above the water. So, to answer the question of what Q3 will look like for Tesla, let's get an idea of what analysts are saying.
The king of the hill, they delivered 466,000 cars in Q2 compared with 1,200 for Lucid, $25 billion in Q2 revenue, on track to deliver 2 million cars, $100 billion in revenue. This is a huge company. It's no surprise it's one of the 10 largest market cap companies in the world and profitable for 15 quarters in a row. So what's interesting there is that if you look at General Motors and Ford, both struggling to get to 100,000 units, that's not even 5% of what Tesla is producing. But, well, Tesla has been the winner so far. And again, the Tesla Model Y, biggest selling car, gas or electric globally. If you step back and look at the big picture of the 10 biggest selling EV models in the planet today, 7 of the 10 are Chinese. So the Chinese are coming. Tesla's going to have to account for that. Ford and GM are going to have to kick it into a higher gear. This is going to be a fascinating show to watch.
Tesla has a good market share in the fast-growing electric vehicle industry, even as more companies are coming into the industry. The car company has maintained its market share over the years, and it could be expected that it will dominate even more shares as the industry continues to expand. Hey guys, welcome back to Tesla Tomorrow. First of all, we know that Tesla's CEO Elon Musk has signaled the third quarter production would be down slightly, but this does not indicate that the quarter won't be impressive. According to Musk, while Tesla continues to target 1.8 million vehicle deliveries this year, he expects that Q3 production will be down a little bit, majorly due to summer shutdowns for factory upgrades. A lot of bears have keyed into this announcement to predict a bad quarter for Tesla. But there are several reasons why they may be wrong, and we're going to go through those in a moment. But before we do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla is a highly rated EV company with a strong potential to dominate the industry in the future. It is no news that the automaker has dominated the market, especially in countries like the US, where the electric car market is still extremely dependent on its production and deliveries. Although as new electric vehicles start to hit the market, it could be expected that Tesla will lose its hold. But this has not been the case. Even though there is a decline in Tesla's market holding, the automaker is increasing its car delivery volumes to cover up. For one, Tesla has increased its car production and delivery volume not only in the US, but in all its markets globally. It has been on the top gear when it comes to car production, and investors are optimistic that there is more on the way. With more cars out, Tesla will likely continue to dominate the EV market, consequently attracting more investors to its stocks. As you may already know, Tesla aims to accelerate the advent of sustainable transportation by bringing compelling mass-market electric cars to market as soon as possible. To do this, Tesla is staying focused on building autonomy for its EVs. And while other EV companies are making an attempt at autonomous driving, no one is as close as Tesla to reaching this goal. One thing is certain, that Tesla stands way ahead of all other EV makers, and is the only company that can successfully achieve autonomous driving, at least in the near future. Tesla is on the move to reach autonomy with its EVs, and at a cost that can be sustained. To pursue this goal, it has built a database that will take other EV companies years to accomplish, and is already collecting large amounts of data from the vehicle's owners in its full self-driving beta test fleet. For any EV company to come close to Tesla, they need to collect a lot of data and then build upon it. Considering the length of time required for this, it's fair to say that no one is coming close to Tesla anytime soon. We believe that Tesla could one day be the world's biggest company, bigger than the world-leading companies like Apple and even Amazon. Think about it, this company has been leading the EV automaker race for years, constantly thrilling the industry with amazing innovations, and more still to come. And despite the various market challenges, Tesla has still managed to soar above any of its competition in incredible ways. Now, for every long-term investor, the goal is to earn massively from investing over a long time. But this is only possible if the company in question has a growth potential for long-term growth. Tesla will have another interesting quarter, and even better ones going ahead. So anyone looking to invest in a growing company and is not considering Tesla must just be looking in the wrong direction. Aside from autonomy, there are superchargers and robots as well, two lucrative ventures that Tesla is looking to tap into. For instance, the automaker may be making a critical move in its supercharging business, and might become the first car company to implement wireless charging technology on a mass scale. According to reports, Tesla has reportedly bought a wireless charging company based in Germany for around $76 million. The EV charging company called Wiferion is focused on industrial equipment, specifically with trucks and forklifts, and it is said that its chargers can offer 93% efficiency and up to 40 millimeters of tolerance when positioning a vehicle atop its chargers. Tesla is always keen on engineering better chargers for its vehicles, for the purpose of making the EV transition interesting and seamless. It's also making significant progress with its humanoid robot, which Musk is claiming will usher in a fundamental transformation for civilization. Several AI experts like Andrej Karpathy believe that the Tesla bot is on the right path to travel if Tesla wants to achieve useful robots and automated help in all aspects of working and personal lives. No doubt it might take a while before Tesla's robots become common in homes and workplaces. However, Musk has said that the company's goal is to make a useful humanoid robot as quickly as possible. The Tesla CEO particularly has high expectations for this project, and seeing that Tesla has already gained popularity with its EVs and is also making significant efforts to roll out the Tesla bots, there's a high chance that we could see Tesla bots functioning in real-life scenarios in no distant time. But what do you think about Tesla's Q3? Let us know down below. And for more information about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.